everybody. Today I'm going to talk about a myth I'm commonly hearing these days, that lower home prices increase housing affordability. Now, no doubt in a vacuum, that is correct. Obviously, the lower the cost of something, the more affordable that becomes. But what I mean is buyers today thinking that just because the price tag on a home might be lower than what it was 3, 4, 6 months ago, that doesn't mean that home is any less expensive than it was back then because of the rise in interest rates. So for example, let me share my screen so I can show you a real general example breakdown of how that works. So let's say that on January 1st, mortgage interest rates were around 3.5%, let's just say, for $1 million home at 123 Main Street, a buyer putting down 20%, $200,000 down payment, that would equate a monthly principal and interest payment of just under $3,600, $3,592. And I'm not including taxes or anything that specific. We're just looking at P&I here. Okay, so that home at 123 Main Street on January 1st with 20% down payment came to that cost. Well, we know interest rates are higher right now, okay? So they're quite a bit higher. So let's even say at 5%. But maybe values have come down a little bit and the home's no longer worth $1 million. Let's just say an extreme example that comes in at now $800,000. So still, if you're still putting down 20% down on that same house, it's now $200,000 less. Look at what your monthly payment is. It's $3,634. It's actually a little bit more expensive than it was on the payment for January 1st. It was $200,000 higher because the interest rate is higher. And this is the power interest rates have when it comes to affordability. So yes, is the home cheaper? Sure, but on a per monthly basis, it's actually more affordable. Now, the big thing with this is, okay, yeah, we're definitely seeing the market cool down, stabilize, and maybe in some cases, there are opportunities for buyers where they can get the home under the asking price or with seller concessions, that sort of a thing. In this example that we just saw here, are we really seeing anywhere in our market, can we expect to see a 20% drop in pricing between the beginning of the year and a year later from now, 6 months after that, whatever it is? Again, don't get me wrong, we're seeing signs of cool down and that sort of thing happening, but to the tune of 20%, that's getting pretty unrealistic. So buyers, just because the prices are coming down, don't think that the world is necessarily your oyster and you're getting these fire sales, because as the interest rates have increased, it could actually be making your payment a little higher, thus making affordability even more difficult. So, but it is a fantastic opportunity still to get a home without any competition, without having to sacrifice your contingencies, release earnest money. And then again, hey, guess what? If you're in the home and a year from now, after the recession, we see a drop in interest rates, you can reduce your payment that way too, and get in before now, get your home already there and earn equity before people start jumping back into the market due to those low interest rates. So the timing and the opportunity we have now is one I haven't seen in years and years and years. So buyers, do take advantage. Don't let yourself fall victim to this myth of housing affordability.